Good morning, everybody. Happy Friday. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So to me, it looks like the taco trade is back. And what is that, folks? It's again referring to Trump making threats and then backing off of them. Now, you might say, well, why is that the case? Well, we saw this on tariffs quite a bit, right? As soon as we saw the Treasury market starting to kind of upheave, then we saw him backing off on certain tariffs when the markets got nervous about China and the back and forth and the insane high levels of tariffs on China and back on the US. He backed it back down a little bit. And now we're starting to see it on other things. For instance, Iran. If you go back to Wednesday, the markets were very nervous. Early in the week, they were nervous about the possibility of the US striking Iran. Over the last day or so, he's come out and said, hey, we're going to give it 2 weeks. 2 weeks. Interestingly enough, another thing he postponed as well, the banning of TikTok. So banning of TikTok deadline was just coming up and he just pushed it out another 30 or 90 days or something like that. So again, the markets now are purely going on the aspect that for the most part, these are threats that don't have any kind of bite to them. Now, could that change at some point? Absolutely, it could change. But interestingly enough, notice how the markets aren't getting super nervous about the upcoming deadline on tariffs, which I believe is July 7th. And again, the aspect there is that they expect the can to be kicked down the road. Now, again, we'll get an excuse like, oh, well, we're in negotiations. We've heard that a lot. We've heard deals are coming. We've heard that a lot. But as of now, that's what it is. And again, as a trader, whether I'm for it or against it is irrelevant. And we all have to remember that. Emotion, throw it out the window. Get rid of it. It does you no good in trading. What we have to do is we have to recognize things and say, okay, well, if that's the case, then how does that impact my trading and my profitability? All right. So again, we'll kind of keep an eye on that. Now let's focus in on the charts here and take a look. If we look at the the S&P futures, you can see that yesterday the markets were trending down. And then really once we heard that, that Iran was going to have at least 2 weeks before any decision is going to be made, you can see what happened. The market started to go up, 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 and we find ourselves basically flat on the day on the S&P 500. So again, there was some downside. In fact, at one point yesterday, the S&P futures were down over 60 points. Now, 60 points, that's a pretty hefty move. That's about 1% decline in the futures on yesterday's day when the stock market was closed. But again, going to today, we've essentially recovered and are floating up. Now, listen, today's going to be an interesting day from one aspect. It is options expiration and it is triple witching. Triple witching means there's 3 different things coexisting. You have the monthlies, you have the quarterlies, and you have other, basically there's multiple expirations today. In fact, today is the biggest options expiration that we have ever had in the stock market. I think I read it was in the $1 trillion amount of options that are going to be likely expiring. Now, what does that mean? Well, for us out there that are traders, it means we have to be a little bit more careful. Late in the day, the institutions may need to push stocks around and bully them around, pushing them up dramatically or down dramatically to get them to prices where they maximize their profit. And again, let me explain this to you guys because this is an amazingly important factor of options. All right. So options, they're sold 99.9% of all options are sold by institutions to retail, right? Now, what does that mean? Do you think the institution loses money on this deal? No way. They wouldn't sell them if they were going to lose money. And so what they do is they say, okay, we've sold X amount of call and put options on Apple, right? Or on Nvidia or on, Robinhood. And they know exactly based on their computers where they need that stock to end on options X to maximize their profit, meaning where do they get the most options that have been bought on the call side and the put side to expire worthless. All right. So oftentimes on Options X Friday, you'll see in the last 30 minutes or hour, you'll see stocks going crazy. They'll either shoot up dramatically or collapse dramatically because these institutions are like, listen, we could take $10 million of our money and sell the stock hard push it down $1 and we'll make $50 million, right? So, I mean, that makes sense. Use 10 million to make 50 million. Makes sense to me. And so I point this out because these are the secrets that here at Verified Investing, we want you to be aware of. It's one of the reasons why I never like holding options into expiration. Once you get close to expiration, you're basically at the whim of the institution. It basically is taken out of your hands. And so if I ever play options, I usually look to get out of them probably a few weeks before options expiration, if not sooner, just to not be embroiled in that game. All right. In any case, let's get back to the charts here and see what we have. Again, S&P futures continue to go up. Keep in mind, guys, if we go to the S&P daily chart, what do we have here? We again have the markets hovering just below their all-time highs. So if we do a measurement here, how far are we below the all-time highs? We are 2.8%, 2.8% below our all-time highs. So we're very close. But remember what I talked about with you guys in the last few game plans. There's a trend line here, and then there's a trend line right here. And essentially, we have broken the wedge pattern right there. That's that trend line. And so this does make the market vulnerable. And even though the taco trade is back, it does have me wondering, even with that being back, is the market going to be able to push up and maybe tag all-time highs, or does it not even matter at this point? Are we going to see weakening economic data, or are we going to see the Federal Reserve doing things? And remember, guys, you know, I really haven't had a chance to go over from Wednesday afternoon's Federal Reserve announcement, but while they didn't move interest rates, the Fed decisively said they expect inflation to uptick and growth in the U.S. economy to downtick. That is what stagflation is. The definition of stagflation is upticking inflation while the economy goes south. And so basically the base case for the Federal Reserve now is stagflation. And again, we then heard from Trump yesterday. He ripped Powell, basically calling for 250 basis point rate cuts. That's like five rate cuts, six. No, that's like 10 rate cuts. Holy cow, 10, 25 basis point rate cuts. But the point being is that you have Trump on one side that wants lower rates. But the problem is if you get lower rates, it can accelerate inflation to the upside. All right, so you have this very interesting dynamic here, which goes into the mix with a slowing economy and inflation that certainly, while we haven't seen the data recently upticking, it likely is still going to uptick because of the low levels of tariffs that have been placed. And let's not forget, guys, oil. When the May month ended and we got the latest CPI data, oil was trading around $66 a barrel. All right, it is up 24% from there in June. That 24%, if we stay here, that's going to be calculated into the CPI for next month. There's no doubt that's going to be inflationary. All right. So again, we'll go over the oil chart in just a minute. But remember, wedge pattern, we are below. As long as we remain below, the market's all vulnerable. All right. Now, could we go up here and retest this area and maybe even kiss the all-time high? Sure. But again, as long as we stay below this wedge, to me, you have to be on high alert for the markets. Couple other things I want to show you guys. Just a reminder, this is a trend line that I've shown you guys in the past. Let me get rid of these trend lines. If we flip to our logarithmic chart and we go back to 1929, which was, again, just before the bubble collapsed then and the Great Depression struck, and we take a trend line and we connect it through the highs of the dot-com bubble, look at what we get. We are basically up into that. Now, if you think about this logically, look at the decline we saw here in the Great Depression. Think about the dot-com decline in the NASDAQ. What was it, like 60%, 65%? All right. And here we are back. Do we really think this little blip, which was 1 month of downside, is all we're going to get off a powerful trend line like this? I highly doubt it. Then you throw in this chart. This is an amazing chart of the NASDAQ. COVID low, bull market high, bear market low, bull market 2024 high. Again, while we came close to the low end here, we haven't tagged it like we did here. To me, that means eventually we should be coming down here. Now, again, could we still go up and tag it one more time? There's always a chance of that. And then it comes down. But my point being is that, is there more upside or downside risk in this market? And the risk is definitely to the downside. Right? I mean, if you look at this logically, how much could we go up before we hit that line? Well, you could rally about 6% on the NASDAQ until we hit that line, or the downside is 30% to that trend line. So again, risk reward, right? As a trader, we all have to be factoring that in. So it's not to say you can't be long, or for even in a good instance, I have specific trades that I am long on stocks, but it's very selective. Like Pfizer, for at least for me, and I can only speak for myself, but I like being long some of these more defensive names right now at these levels. Pfizer pays a 7+% dividend yield. It's low on the chart. It just broke out of a wedge pattern. Like, those are the charts that I'm looking at versus, some of these stocks right now are insane. Whether it's Robinhood or Coinbase or even Circle. I mean, Circle, we'll talk about that in a second, but that's an insane chart to say the least. All right, the dollar. Take a look at this, guys. I found a new trend line on the dollar. This is an amazing one. High pivot from 2020 in March when everyone ran for the safety of the US dollar during COVID. You connect it to this low and look right into these lows right here. So that's kind of an interesting level here that we have been holding on the downside on the US dollar. And you can see the evolution in these game plans of how I'm finding these levels. And then all of a sudden I'll be like, you know what? Let me look a little harder here. Oh, look at this trend line. This is amazing. Pretty cool stuff. But in any case, right now, very clear that this trend line beautifully goes back to the bull high on the US dollar there. Pivot low and low. Now, listen, we could eventually break this, and I still think the dollar eventually does break it. But in the near term anyways, it looks like we're stuck between what we would call a megaphone pattern, which is kind of two lines that are going further and further apart. You're stuck in this range here. The 10-year yield. 10-year yield is up a little bit today, but nothing too crazy. Again, we still have broken a little bit here. Again, could we inch up back to here? Maybe, but eventually I do think yields come down, as I do expect that the trend of weakening economic data will continue. All right, so again, trend of weakening economic data should continue. Here we have a chart of Coinbase trading at 306. Now, Coinbase is an interesting one, guys, because basically we got the Genius Act passed, which is a stable coin bill. That was passed, I believe, in the House. It has to get through the Senate. But essentially, all these crypto stocks ran up on that. Now, in addition, Coinbase said that they're going to get into essentially stock trading via derivatives, via contracts, right? Blockchain contracts. Now, what's interesting about that, so number one, Coinbase had this huge move on Friday, and I'll give you the levels, but there's a different ancillary play that I think I am finding before anyone else finds it. All right, so first of all, there's a couple levels on Coinbase I'm going to watch today. If we look at this, these are my two levels. So we have first level is going to be right here at 311.5. And then second level is this downsloping one at around 335. This one could be a good day trading one. This one might be a good swing trading one. All right. So again, $311.5 on Coinbase. That would be a shortable level for a day trade. And then if it got up here, I would consider it a swing trade level at $337 right there. But check this out. If Coinbase is getting into stock trading, right, then what does that do to their closest potential competitor? And this is where I think there's a trade. And this could be a great swing trade short. And the answer to that, and you guys might already think of it, Robinhood. All right, think about it. Robinhood does crypto, and they do stock trading. And they're very popular with the younger generation, right? Well, guess what? What else is popular with the younger generation but didn't do stock trading, only crypto trading? Coinbase. Well, guess what? If Coinbase is getting into stock trading, that's going to be a problem potentially for the same demographic that Robinhood has been going after. So listen, just my 2 cents on this. I also think the chart is interesting on Robinhood here, this upsloping trend line here. Very interesting that we are right up into it. But again, just kind of keep that in mind. These are the ways that you can find great setups for potentially a pullback in certain key names like a Robinhood. Now let's turn our attention to Circle, guys. Circle, incredible. So this is a stable coin. They're the ones in charge of USDC, which, by the way, a lot of you guys will call me, an oldie or a boomer or whatever you want to call me. But I'm still trying to figure out how companies can just be like, oh, let me print another $1 billion of stable coins, and it'll be basically pegged to the dollar, so it's worth $1. And again, you guys, I'm sure in the comments will set me straight, no problem. But in my head, isn't that the same as the Federal Reserve or the U.S. government then? They're just printing as much as they want. And as long as people are willing to use them, then it's essentially free money printing. And then also, how does that factor into the money supply? I would love to ask Jerome Powell that, right? How does that factor into the money supply? If you have, let's say, billions and billions, if not, let's say, a trillion in stable coins that are basically pegged to the dollar and used as dollars, what does that do to the money supply? So these are all things that, again, I'm not going to pretend to be an expert on. There's way better people out there, but it is to me something that I would like to know, frankly. And so we go back to this chart, and this stock IPO'd at $30. And by the way, so Goldman Sachs was one of the firms that brought them public. The IPO price was $31 a share. Shame on Goldman Sachs. If I was Circle, I'd be pissed at them, because look at where this is trading now 2 weeks later. It basically pre-market, it got as high as 235. Like, look at this. 238. $238 a share. Now, listen, I'm not saying they should have priced the IPO up here, but I mean, couldn't they have gotten $100 for it? Couldn't the company have been compensated and gotten $100 per the amount of shares that they were selling out there in the IPO? I don't know. It just seems a little ridiculous. But listen, is this stock up? This stock is up 500% since its IPO, and that's actually, it's 600 now because of the pre-market. But essentially, at some point, this bubble bursts. I just don't know how high it goes, but be very careful. This is one where it is astronomically high. At some point, we'll see it shoot up and then reverse and go negative, and it will correct massively. And I would guess that, again, I might be interested in buying this at 130 down here, maybe, but it would have to, again, it's gapping up, like literally, this is where it is up here right now, right? So, I mean, it's all the way up here. It IPO'd. Let's put a trend line right here, guys. It IPO'd at 31. That's right here. So this is the IPO. This is where it's trading right now. Actually, in fact, we'll put it where it traded at the highs, which was 238, right up here, basically. So IPO, where it's currently trading, this would basically be a 50% retrace. That would be interesting to me. Aside from that, it's very hard to short. It's very hard to get shares to short. But again, you just got to be careful with these things because you don't know how high they go before the merry-go-round stops. All right. Another stock in motion is CarMax. CarMax reporting earnings this morning. The stock is up about 10%. Nothing major here. But again, the stock is relatively low recently. I don't see any trading levels. If you're really aggressive, there's a gap fill at around 72. But, to be honest, I'm not looking at this as a tradable opportunity at this point. Maybe, let's see, maybe I would consider a day trade short if it pulled back into this area at 81 and change, $81.85, give or take. But really, again, it's just not a big enough move to get me out of bed. Bitcoin, look at the upsloping trend line. This is that lower level of the wedge pattern that I've been talking about. And look at Bitcoin today. It is catching a bid. So again, we're stuck within this wedge pattern, coiling to see which way we break out. If we break down, I think we go down to the 95 to 93 level, 93,000 that is. So 95,000 to 93,000. And if we break out, I think 120,000 is a possibility. But let's see which way it goes. Generally, upsloping wedges, well, it's close to 50-50. But again, for me, I'm looking at the NASDAQ. Wherever the NASDAQ goes, that's where Bitcoin's going to go in the short term. I do think it's interesting that there's this much hype on things like Circle, and altcoins are getting no love whatsoever. Quickly looking at a few of these charts. Here's your chart of Ethereum. Nothing going on there. I mean, you want to look at like some of these other altcoins here. Cardano. If we look at Cardano here, let me bring up my Coinbase chart. It's the one I usually analyze. But basically, you can see even Cardano broke down short term. So it's stuck in this downsloping channel. But again, you can see that it broke below the downsloping trend line, or this flat horizontal trend line here. And again, that does make it a little tricky. It's trading around 60 cents right now. But again, notice how you're not getting any love in these altcoins of significance. I mean, obviously, there's the one here and the one there that's getting pumped. But for the most part, a lot of these altcoins are still trading basically near 52-week lows, and some of them are even at all-time lows if you go down the list of altcoins. So it's basically a Bitcoin show with a few altcoins along the way, and then stable coins right now is, stable coin stocks, obviously. Stable coins are going to stay at $1 pegged anyways, but stable coin stocks, i.e. Circle. But again, just remember, guys, Circle at some point will collapse down. The question is just how high will it go? All right, let's look at gold real quick here. Gold is coming down today. Again, there's the idea that Trump isn't going to do anything significant to disrupt the economy or hurt the economy, especially while Powell seems to be anti-lowering rates. Maybe once Powell's out of there, he would consider it. But right now, it's very clear that he doesn't intend to do anything dramatic on the tariff side or on the Iran side or even on the TikTok side. I mean, all of these things are basically just getting the can kicked down the road. So gold is coming in as it's kind of the risk on trade is to sell gold and buy stocks out there. Silver was interesting yesterday. Yesterday, silver did trade. But again, we can see here, came in, big flush. So again, it looked like it was breaking out of this little bit of a wedge here. We had this kind of pattern formation that I talked about on Wednesday. It broke up and then it came right back in. So I'm hovering still right here for my buy level around $34.50 on silver. He gets down there, I would be interesting. Oil, same thing, kind of been all over the map. Oil was popping yesterday before Trump came out and talked about giving Iran 2 weeks to do some diplomacy and decide. And then oil kind of just came back in, and it's just going sideways at this point. Nothing much going on there. And then nat gas has had a nice move here. It went right up, piercing this level, and look, boom, right there, starting to reverse. So it went right up into that upsloping trend line, and it is starting to reverse. It hit a high here of around $4.18, and then is coming back in just a little bit. All right, guys, so listen, today is a day where, needless to say, it's options expiration. We have to watch and see. But ultimately, there's a lot going on here in the underbelly of the market. There's a lot of doubts, a lot of this, a lot of that. Let's watch and see what the charts tell us. Focus on the charts. By the way, Investor Empowerment Day is on Monday. I'll be trading live in the studio. You'll hear us doing the afternoon live day trading room and see us doing the live day trading room in the afternoon. All of this stuff, we're going to have big sales going on. It's going to be an awesome, empowering day for you guys out there. Before we get going, I did want to play something for Investor Empowerment Day. If Ryan, you could set that up right now. Let's rock and roll. All right, guys, I'm excited for it. It's going to be an intense day for us here, but we are doing it for you. I swear I will talk about stuff that will blow your mind. It will be incredible. The traders out there will be sharing their knowledge, their styles, trading RSI, trading all these other things. It is going to be an awesome day. And again, like I said, we'll be having major discounts and major sales on our courses as well. So again, I know it's a lot of people, some of these courses are a little on the pricier side. I'm hopeful that this will be an opportunity for you guys to take advantage and empower yourselves. And again, I'll be trading throughout the day. You'll see my account, all that stuff. So it should be awesome. You guys have a great rest of your day. Thank you so much for tuning in. I'll talk to you soon. Take care.